There is something happening with Rolex and customers don't know what to do. Rolex, the crown. It is arguably the most powerful name in luxury watches. The brand that turns heads, opens doors, and has defined what it means to wear success on your wrist for over a century. But if you've been watching the watch market lately, really watching it, you've probably noticed that there is something fundamentally wrong. Prices are falling, inventory is piling up. Wait lists that used to stretch for years are shrinking by the month. And across Reddit forums, YouTube channels, and gray market dealer WhatsApp groups, the same question keeps popping up. Is Rolex about to collapse? What's happening right now isn't some conspiracy theory cooked up by salty collectors who couldn't get their Daytona. This is real, documented, measurable. But how did we get here? Today, we'll be peeling back what happened. Let's get into it. The pandemic boom, when Rolex became digital gold. Let's rewind to 2020, when COVID hit the world. The world shuts down as a response, and suddenly, people who used to spend money on travel, restaurants, concerts, and experiences are sitting at home with cash burning holes in their pockets and nowhere to spend it. Then governments began to pay stimulus checks. When government money flooded into bank accounts, crypto surging, the stock market is bouncing back faster than anyone expected, and interest rates nearly zero, which meant keeping cash in savings was basically throwing money away. People needed somewhere to park their wealth, something tangible, something that felt safer than stocks but more exciting than bonds, and they found it. Luxury watches, specifically Rolex, became that asset. Here's the thing about Rolex. Even before the pandemic, certain steel sports models were hard to get. The Submariner, the GMT Master II, the Daytona. These weren't watches you could just walk into an authorized dealer and buy. You had to build a relationship, spend money on other watches, wait for a while and maybe get lucky. It was kind of like how Ferrari does too with its sports car. You have to buy lesser models before moving on to the big guns. But in 2020 and 2021, that scarcity went from annoying to lucrative. Because if you could somehow get your hands on a steel Daytona at retail for around $15,000, you could flip it on the gray market for $30,000. Instant profit. No risk, no waiting, and all of the rewards. The Rolex Submariner date, a watch that retailed for around $9,000, was suddenly selling for $18,000 on the secondary market. The GMT Master II, Pepsi, with its red and blue, was going for $10,000 on retail, but on the gray market, it went for $25,000. And it wasn't just the classics. The Oyster Perpetual, historically Rolex's entry-level watch, was retailing for around $5,700. By early 2022, gray market dealers were asking $32,500 for certain dial colors. It was all sorts of strange, but as long as there was profit to be made, Rolex drew a different kind of crowd, and this next part also played a key role in the market madness. The social media hype machine. What made this bubble different from previous Rolex booms was social media. Instagram, YouTube, TikTok. Suddenly, watch flipping wasn't happening in backrooms and dealer WhatsApp groups. It was happening live, on camera, for millions of people to watch. Guys like Vucom, wrist checkers, and a whole army of gray market dealers turned their Instagram feeds into reality TV. They'd film themselves walking through Manhattan, fists clenched around stacks of cash, buying a Daytona from one dealer and flipping it to another an hour later for a $5,000 profit. It was addictive to watch. The deals, the drama, the margins. Every flip became a storyline, and the personalities behind the trades became stars. And for a new generation of collectors, people who discovered watches not through heritage or horology, but through Instagram reels, this was the entry point. Watches weren't heirlooms anymore. They weren't sentimental pieces passed down through generations. They were assets, tradable, liquid, fast. And Rolex was the crown jewel. The Daytona, the Submariner, the GMT, these provided instant liquidity. You could flip them faster than you could flip a house. And unlike crypto or stocks, you could wear your investment on your wrist while you waited to sell it. It was a win-win for this new set of Rolex enthusiasts and the economy they created. Let us provide more details. The flipper economy, here's where it gets messy. Authorized Rolex dealers, the official boutiques and jewelers who sell brand new Rolexes, started noticing a problem. Their best customers, the ones spending tens of thousands of dollars on jewelry and other watches to build relationships, weren't keeping their Rolexes. They were flipping them immediately. A guy would walk into a Manhattan Rolex AD, buy a GMT Master 2 for retail, walk out the door, and have it listed on Chrono 24 by the time he got to his car. Some of these flippers had relationships at a dozen different authorized dealers. They'd buy every allocation they could get, flip them all, and pocket the difference. And the profit margins? Multiply that by a dozen watches a year, and you've got people making mid-six-figure incomes just from flipping Rolexes. The problem was, for every flipper making money, there were 100 genuine collectors getting shut out. People who actually wanted to wear the watch, who'd been saving for years, who walked into authorized dealers only to be told, "We don't have it. We don't know when we'll have it. Maybe try again next year." And meanwhile, those same watches were sitting on gray market websites at double the price. Rolex didn't like what was happening, but they didn't do anything obvious. To the outside world, they waited while things got out of hand, and in 2022, the situation had become truly bizarre. The peak, March 2022. The market peaked in March 2022. Watch charts, which track secondary market prices across tens of thousands of luxury watch listings, showed the Rolex market index hitting an all-time high. The Rolex Daytona 116500LN in steel with a white panda dial, a watch that retailed for around $15,000, was selling for $53,900 on the secondary market. That's the single highest price point in Bob's Watch's entire historical database. A watch that you could theoretically buy at retail for 15 grand was trading hands for over 50. The Oyster Perpetual, Rolex's simplest, most affordable watch, hit an average market price of $12,000, up from $3,800 just 2 years earlier. That's a 472% gain. Everything was up. Everything was selling. And for a brief, dizzying moment, it felt like the Rolex market had achieved escape velocity. Like prices would just keep climbing forever. And then it didn't. The pandemic boom was wild, unprecedented, but it was also unsustainable. And by the spring of 2022, the economic realities that had fueled the frenzy started to shift. Interest rates rose, crypto crashed, and suddenly, all those speculators who'd been riding the Rolex wave found themselves holding very expensive inventory that nobody wanted to buy. What happened next wasn't a crash, but it sure felt like one. Secondary market prices have fallen, and it's not subtle. So here's where we are. It's 2025 and the Rolex market looks nothing like it did 3 years ago. Let's break down what's actually going on piece by piece, with the numbers, the data, and the real-world evidence that shows this isn't a collapse. It's a correction, a brutal one, sure, but a correction nonetheless. After years of watching Rolex prices rocket into the stratosphere, the secondary market has come back down to earth, hard. According to watch charts, the overall Rolex market index has declined for 9 consecutive quarters since peaking in March 2022. That's 9 straight quarters of declining prices. The most recent data from 2024 shows that secondary market prices for Rolex steel sports models have dropped 7.2% year over year. But those aggregate numbers don't tell the full story. When you zoom in on individual models, the drops are even steeper. The Rolex Daytona 116500LN, the white dial Panda that was trading at $53,900 in March 2022, by early 2025, it's down to around $32,000. That's a 29% decline from peak to the floor. This happened despite the fact that Rolex has continued raising retail prices during that same period. The Submariner Date 126610LN, one of Rolex's most iconic models, saw its secondary market price drop 15 to 20%. The GMT Master 2 Pepsi has fallen from highs of $35,000 to around $26,500. And the Oyster Perpetual, the model that hit $12,000 at the peak, is now trading around $9,000. Still well above its original retail price of $5,700, but nowhere near the insanity of 2022. Industry analysts aren't calling this a crash. They're calling it a healthy market correction, a reset. The kind of pullback that happens when speculative froth gets blown off and prices return to something closer to fundamentals. But if you bought a Rolex in early 2022 thinking it was an investment, you're sitting on a loss. And if you're a gray market dealer holding inventory you paid peak prices for, you're bleeding money. And it's not just Rolex. The entire Swiss watch industry is feeling the squeeze. Swiss watch exports dropped 3.8% in February 2024, marking the second time in 3 years that monthly exports declined. By March, the numbers got worse. Exports plunged 25.4% compared to the previous year. That's around 400,000 fewer watches exported. Demand from Asia, historically one of the strongest markets for Swiss luxury watches, has cratered. China saw a 25.4% drop in demand. Hong Kong fell 19%. Even the United States, which had been a bright spot, started showing signs of cooling off. Some mid-tier brands are feeling real pressure. Companies like Breitling, Omega, and even high-end players like Audemars Piguet have seen their secondary market prices decline by double digits. Breitling dropped 5.9%. Omega fell 6.8%. Audemars Piguet, one of the holy trinity of watchmaking, dropped 12.5%. But here's the twist. Rolex, despite the secondary market decline, is still utterly dominant at the retail level. The brand posted over $10.5 billion in revenue for 2024, a $500 million increase from 2023. Its market share actually grew to 32%, an unprecedented level of dominance. That means Rolex alone controls nearly 1/3 of the entire Swiss luxury watch market. For comparison, Louis Vuitton holds about 19% of the luxury handbag market. Rolex's dominance is unmatched. Rolex still holds strong value, better than almost anyone. Despite the correction, Rolex remains one of the strongest value-retaining brands in the luxury sector. And when you compare it not just to other watch brands, but to the broader luxury market, Rolex still looks incredibly resilient. According to recent resale data, Rolex watches retain their value better than almost any other luxury brand. Whether you're talking watches, handbags, or cars. Some models, like the Datejust, have even seen slight price appreciation in early 2025, outperforming the overall secondary market index. Chrono24's February 2025 data showed that while most luxury watch brands were still declining, Rolex posted a small uptick. It wasn't huge, maybe a fraction of a percent, but in a market that had been falling for 2 years straight, even a tiny gain was notable. And here's the thing, Rolex still makes watches that people actually want. The wait lists haven't disappeared, they've just gotten shorter. Instead of 5 to 7 years for a steel Daytona, you might now be looking at 2 to 4 years if you're a VIP client at an authorized dealer. For a Submariner, wait times have dropped from 18 to 24 months down to 3 to 12 months, depending on the dealer and your purchase history. That's not a sign of a dead brand. That's a sign of a market rebalancing. Here's the reality that you don't know. What's happening right now is good for the watch industry, good for collectors, good for enthusiasts, and yes, even good for Rolex. But how? Why this is actually healthy. During the peak bubble years, Rolex became inaccessible to normal people. If you weren't a flipper with gray market connections or a VIP spending 6 figures a year at your local authorized dealer, you had no shot at getting the watch you wanted. The secondary market was your only option, and prices were so inflated that most people couldn't justify it. Now, prices are still above retail, but they're a hell of a lot more reasonable than they were in 2022. A Submariner that was trading at $20,000 is now closer to $14,000. Still a premium, but not an insane one. And for the first time in years, authorized dealers actually have watches in stock. Not the full lineup, sure, but walk into a decent Rolex boutique today, and you might actually see a Datejust, an Oyster Perpetual, maybe even an Explorer on display. That wasn't happening in 2021 or 2022. Speculation is dying, flipping is dying, and genuine watch enthusiasm is coming back. So if the market is correcting, if prices are stabilizing, and if Rolex as a company is stronger than ever, why does everyone keep saying the brand is in trouble? Well, that's where things get interesting, because the narrative of Rolex's collapse isn't being driven by the data. It's being driven by perception, fear, and a whole lot of clickbait, and we'll touch on that now. Price fluctuation on the secondary market looks dramatic. Let's be clear, Rolex isn't in trouble, the company is thriving. But perception is powerful, and right now, the narrative around Rolex is overwhelmingly negative. So where is this coming from? Why do so many people believe the crown is crumbling? The biggest reason people think Rolex is collapsing, they're looking at the wrong numbers. When you see a Rolex Daytona drop from $53,000 to $32,000, that looks catastrophic. A $21,000 loss, a 40% decline. If you don't understand the context, if you don't know that $53,000 was a speculative bubble price that had nothing to do with the watch's actual value, then yeah, it looks like the sky is falling. But here's what people forget. The retail price of that Daytona is still only around $15,000. Even at $32,000 on the secondary market, it's trading at more than double retail. That's not a collapse. That's a correction. The problem is, a lot of people entered the Rolex market at the peak. They bought watches in 2021 and 2022 thinking prices would keep climbing, and now they're underwater. If you bought a Daytona for $45,000, thinking you could flip it for $50,000, and now it's worth $32,000, you've taken a massive loss. But that's not Rolex's fault, that's speculation biting back. And yet, the people who lost money are the loudest voices online. They're the ones posting Rolex's dead videos on YouTube. They're the ones complaining in forums about how the brand betrayed them. They're the ones who thought they were financial geniuses for flipping watches, and now they're stuck holding depreciating inventory. We'll still go deeper on these people, but let's talk about another aspect of the Rolex market first. Demand has cooled compared to the pandemic. Boom! During 2020 and 2021, luxury goods in general saw a massive surge in demand. People who would normally spend money on travel, fine dining, concerts, and experiences suddenly had that money available to spend on things. Watches, handbags, cars, jewelry. It was called revenge spending. The idea that after being locked down for months, people wanted to reward themselves. And luxury watches, especially Rolex, became one of the most popular revenge purchases. But by 2023 and 2024, that dynamic had completely reversed. Travel was back, the restaurants were packed, concerts sold out instantly. People were spending their money on experiences again, not things. And suddenly, the urgency to buy a Rolex disappeared. The FOMO that drove so much of the 2021 frenzy evaporated. Because it turned out, if you waited, you could get the watch. Maybe not immediately, but eventually. Gray market dealers who'd been able to flip Submariners in hours were now sitting on inventory for weeks. Months even. And as inventory piled up, prices started to fall. Not because demand disappeared entirely, but because the speculative mania that had inflated demand to insane levels was gone. Normal demand looks boring compared to bubble demand, but normal demand is sustainable. Bubble demand isn't. And then there's the media ecosystem. TikTok, Reddit, Instagram, all of these platforms reward sensationalism, and nothing gets more clicks than a good collapse narrative. Let's talk about them. Clickbait content has created a narrative spiral. Rolex is finished. Why the Rolex bubble just popped? I lost $50,000 on this Daytona. These contents rack up hundreds of thousands of views because they tap into fear, schadenfreude, and the irresistible appeal of watching something fall apart. And once a narrative takes hold, it becomes self-reinforcing. More creators jump on the trend, more people share the content, and suddenly, even people who don't follow the watch industry closely start thinking, maybe Rolex really is in trouble. But here's the thing, most of these contents are based on secondary market data, not actual business fundamentals. They're looking at Chrono 24 listings and gray market price drops and treating those as indicators of Rolex's health as a company. Which is like looking at GameStop stock in 2021 and thinking it accurately reflected the company's actual business performance. The secondary market is not the primary market. Gray market prices are not retail prices. And speculative bubbles popping doesn't mean the underlying product is bad. It just means the speculation was unsustainable. But nuance doesn't get clicks. Rolex is actually fine. As you have seen, it was just overvalued for a while. However, there's also a legitimate macroeconomic factor at play. Economic uncertainty is making buyers cautious. 2024 and 2025 have been weird years economically. Inflation is still elevated, interest rates are high, The stock market is volatile, geopolitical tensions are escalating, and luxury consumers, the people who buy Rolexes, are feeling more cautious. When you're worried about a recession, or your portfolio is down, or your business isn't doing as well as it was a couple years ago, you don't rush out to buy a $15,000 watch. You wait, you see how things shake out. And that caution is showing up in the data. Authorized dealers are reporting that customers who used to buy multiple watches a year are now buying one or none. VIP clients who used to have no problem dropping $50,000 on a yellow gold day date are now asking about payment plans. It's not that Rolex has become less desirable, it's that the economic environment has changed, and people are being more conservative with their money. Which, again, is normal market behavior. It's not a collapse, it's a slowdown. And finally, there's the flipper problem, which we are going to be addressing next. Flippers are loudly complaining about lost profits. For a few years, flippers made an absolute killing off Rolex. Guys were making six figures a year just from arbitrage, buying at retail, selling on the gray market, pocketing the difference. But now, the margins are gone. A lot of the popular models are trading at or even below retail on the secondary market. A steel submariner that retails for $9,500 might sell for $10,000 on the gray market if you're lucky. That's a $500 profit before you account for platform fees, shipping, and taxes. Not exactly worth the effort. And for flippers who bought inventory at peak prices, hoping to make a quick buck, they're taking losses, big ones. These people are not happy, and they're vocal about it. They're the ones posting angry rants on Reddit. They're the ones leaving one-star reviews on authorized dealers who screwed them over by not giving them more allocations. They're the ones claiming Rolex ruined the market by increasing production. But their complaints aren't about Rolex as a brand. They're about Rolex as an investment vehicle. And the truth is, Rolex was never meant to be an investment vehicle. It's a watch company. It makes watches. Beautiful, well-engineered, iconic watches. The fact that some people treated those watches like day trading opportunities doesn't make Rolex responsible for their losses. So when you step back and look at the full picture, the story isn't about a company in crisis. It's about a market correcting itself after an unsustainable boom. It's about speculation dying and genuine enthusiasm returning. It's about Rolex, the company, being stronger than ever, while Rolex, the meme, the hype, the get-rich-quick flip fades into history. And honestly, that's exactly what needed to happen. What this means if you want to buy a Rolex. So let's bring this all together. Is Rolex about to collapse? No, absolutely not. The company just posted over $10.5 billion in revenue, as we've mentioned before. It controls 32% of the entire Swiss luxury watch market. It produces around 1.2 million watches a year, and every single one of them sells. Rolex has more brand equity, more manufacturing capability, and more financial strength than at any point in its history. The idea that Rolex is collapsing is a narrative born out of secondary market corrections, social media hysteria, and the collective disappointment of speculators who thought they'd found an infinite money glitch. What's actually happening is a market reset, a correction, a return to sanity after a couple years of absolute madness. Prices on the secondary market are falling, sure, but they're falling from speculative highs that never should have existed in the first place. And here's the thing, for genuine watch enthusiasts, for people who actually want to wear a Rolex, this correction is the best thing that could have happened. Wait lists are shorter, prices are more reasonable. Authorized dealers actually have stock. The flip or die mentality is fading, and in its place, something better is emerging. A market where people buy watches because they love watches, not because they're trying to make a quick profit. If you're in the market for a Rolex right now, this is genuinely a pretty good time. Not perfect, prices are still above retail, wait lists still exist for the most desirable models, but it's the best buying environment we've had in 5 years. Steel sports models that were completely unobtainable in 2021 and 2022 are now available on the secondary market at prices that, while still a premium, aren't completely insane. A Submariner for $13,000 to $14,000? Not a bad deal, all things considered. A GMT Master 2 Pepsi for $25,000? Still expensive, but not the $35,000 it was a couple years ago. And if you're willing to work with an authorized dealer and wait a bit, you might actually get the call. Dealers are getting more inventory. Allocations are improving. The days of "you'll never get this watch unless you spend 6 figures on jewelry first" are fading. What this means if you already own a Rolex. If you bought your Rolex to wear it, to enjoy it, to pass it down to your kids someday, then none of this matters. Your watch is still beautiful, still functional, still iconic. Rolex isn't going anywhere, and your Submariner or Daytona or GMT Master 2 will continue to be a Submariner or Daytona or GMT Master 2. But if you bought your Rolex as an investment, if you thought it was going to appreciate forever, then yeah, you might be feeling some pain right now. And the hard truth is, that pain is warranted, because watches aren't stocks. They're not real estate. They're consumer goods. Luxury consumer goods, sure, but consumer goods nonetheless. Some Rolexes will appreciate over the long term. Vintage pieces, rare references, and historically significant models. But modern production Rolexes, the ones Rolex makes 1 million of every year, those are meant to be worn, not hoarded in a safe, waiting for the value to go up. So what have you learned? The big picture. What Rolex's collapse teaches us. At the end of the day, the story of Rolex's collapse is really a story about speculation, about what happens when an asset class, whether it's watches, sneakers, NFTs, or Beanie Babies, gets turned into a casino. For a few years, people treated Rolexes like Bitcoin. They thought prices could only go up. They thought scarcity plus demand equaled infinite returns. And they forgot the most basic rule of economics. What goes up must come down. Rolex, the company, never lost sight of what it was. It kept making watches, great watches. It didn't ramp up production to chase the hype. It didn't flood the market with limited editions to cash in on the frenzy. It stayed disciplined. And now that the frenzy is over, Rolex is still here, still dominant, still the crown. The flippers? A lot of them are gone. The speculators? They've moved on to the next thing. The YouTube clickbait? It'll fade once people realize there's no actual collapse to report on. But Rolex? Rolex will still be making watches in 2030, 2040, and even 2050. Because that's what Rolex does. And for the rest of us, the people who just love watches, that's all that really matters. If any of this shocked you, or if you're now wondering whether to scoop up a Rolex while prices are down, or if you're just fascinated by the wild ride this market has been on, tell us in the comments. What Rolex model do you want? Did you buy at the peak? Are you waiting for prices to drop further? We want to hear your thoughts. And if you found this deep dive valuable, make sure to like this video, subscribe to the channel, and stick around for more analysis on the world of luxury watches. Because trust us, the story isn't over. The market is still evolving, and there's plenty more to unpack. Rolex isn't collapsing, but the myth of Rolex as a guaranteed investment, that's dead and buried. And honestly, good riddance.